Hello and welcome to the National Fintech Organization and this next installment in the series NFO's Growth Garage. Get smart and get connected. Today, we'll hear from Mike Alice of FIS, Sean Banks of TTV Capital, Steve Duperry of CSI, Mike Cressy of FIS, Wayne Miller of ICBA Solutions Group and BankTech Ventures, and Ken Salazar of Bilgo as they discuss leading a fintech through uncertain economic times. All attendees are in listen-only mode, but the chat feature is available at the bottom of the window for comments and questions. Please give it a try now and let everyone know what part of the world you're connecting from. And as we go along, add your questions for our panelists. This session is being recorded and will be available on demand within the next few days on the NFO's YouTube channel. And now, I'd like to hand it over to Mike Alice to get us started. Mike?
Good afternoon, everybody. Thank you for joining us today. We're really excited to have you joining us for this Growth Garage session. National Fintech Organization, or NFO, is an organization that seeks to help fintechs, and especially early stage fintechs, have the resources and education and network they need to grow and thrive. So we appreciate you joining us here today, and we hope that you find this helpful. My name is Mike Alice. I am with FIS. And I will be kind of facilitating the session today. I am very, very thankful to call the panelists who have joined us today friends, and I'll introduce them in just a moment. But first, just to tee up what the topic is, and that's quite frankly that the economy is a bit of a challenge right now. Rising interest rates, inflation, a stock market ticker that's showing a lot of red recently, buyers delaying their decisions, layoffs throughout a number of industries, et cetera. All of these are realities in today's economy. Fintech is a fabulous industry to be in, as we all know. I've spent a few decades in it and I've loved it. And there is a ton of opportunity for innovation and growth and making an impact for good within Fintech. But that doesn't mean that leading in it in the moment is necessarily a cakewalk. So the topic for today is going to be leading in fintech during a challenging economy. The objective or the goal for our time here today is going to be to provide each of you some nuggets of wisdom to take back to your organizations to help you lead more effectively within your organizations during this period. So that's the goal. We want you to be able to walk away with some tangible ideas or thoughts on how you can lead your organization even better than you already are. And where is that wisdom going to be coming from? That brings me back to my friends that are going to be joining us here today. So I'm going to introduce the five of them very briefly and then not waste any time getting to the content. First of all, we have Sean Banks. Sean is a partner at TTV Capital. He has been in venture capital for over 15 years, and he has deep specific expertise within the fintech space. Steve Duperry, a good friend of mine who I first got to know when he was the president of the board for AFT, Association for Financial Technology. Steve is the VP of Operations at CSI and has several decades of leadership experience within the fintech space. Mike Cressy, a colleague of mine at FIS, he's an SVP there responsible for driving strategy, running the P&L and business operations for our B2B payments area. Ken Salazar is the Chief Revenue Officer at Bilgo. Ken is a true small business expert who is also now helping Bilgo grow their large FI and technology client base. And then finally, Wayne Miller, probably a guy none of you need a lot of introduction to, but a fellow with a lot of expertise both in the startup and in the mature business space. Wayne spent the last 6 years as the executive director at the Venture Center, and he now leads ICBA's innovation program. So we got a great panel today, a lot of expertise, a lot of wisdom here, and I'm excited for them to share that with all of you. So to tell you how we're going to spend this time, I'm gonna share some quotes and ask some questions spinning off those quotes, and I'm going to just kind of pass the ball around to the gentleman here and let them spend a few minutes answering these questions. My first quote is one from Mark Twain, and the quote is, "History does not repeat itself, but it does rhyme." So playing off that quote, here's my question. Although it's not exactly the same, guys, We've had challenging economies before that have looked and smelled and sounded a lot like this one. Each of you have led and have observed others leading in those moments. What is an example of something you've learned while leading through past challenging times like this that helps you now lead through this? And Sean, I'm going to give you the ball first.
Thanks, Mike. Great question. Having been investing in early stage companies since really 2005, obviously we saw a rhyming cycle back in 2007 to 2009. The real critical things to take away as you go into an economy like this is, one, there is, light at the end of the tunnel. It may not be for another 12 months or so, but there is light at the end of the tunnel. But beyond that, while it seems that capital markets have seized, especially in the private equity space, companies that are performing and continue to perform will still be able to raise capital. Now, all of that being said, our guidance to our portfolio companies has been and continues to be, ensure that you've got at least 12 months of runway. And that's a pure math equation around expenses and cash on your balance sheet, because no entrepreneur should want to have to go into an economy like this and try to raise capital. You're going to face undue dilution. But secondly, you want to make sure you avoid that existential event. It's better to have some of a pie that's still cooking than all of a pie that's burnt.
Excellent. Thanks, Sean. I appreciate that. Mr. Cressy, you take the ball next.
Yeah, I'd love to comment on that. And echoing first what Sean said, this too shall pass, right? I remember going through the dot-com collapse and then, of course, through the financial crisis that Sean was referring to. And so first and foremost, there is the fact that we are in a cycle, we are in a season, and we will get to the other side of it. But the other thing that's really critical is make sure that you start focusing on what your core differentiation is that you're bringing to your particular market. It's so easy when you start getting involved in bringing a solution to a set of clients for those clients to want to extend you into other areas and into potential adjacencies that aren't core to your original value proposition and can actually cause you to invest in returns or in capabilities that might not deliver the returns that your original core value proposition really had. And so just one thing, if I was going to leave it with the folks on the phone, it would be really focus on core, not on more. Make sure that you're really down back to your core value proposition and how that's going to differentiate and continue to drive the growth for you that you're looking for.
Excellent. Thank you, Mike. Mr. DePrime is that? I'm not sure if that's how you say your name, but go ahead, Steve.
Yeah, so keeping on the same theme as Mike there, getting to the core of what you do. A big focus that I've observed and actually am experiencing right now is a focus on executing well in these critical times. The company has a couple of any company in a time like this has a couple of primary challenges. One, the challenge of the business environment, but also the challenge that your people and your team have in their own personal lives that is being created by the economic conditions that exist, inflation being the example right now. So I think it's critical that as leaders, we jump in the trench and we focus and we're there with our teams to execute on the plans that we have to come out better and stronger on the other side. I think it does a couple of things. First off, it's going to strengthen the company with that focus on execution, but it's also going to show your teams that you're in there with them, you're in there together and you have their backs, and that's going to give them not only a sense of connection with the company and the culture, but it's also going to give them some assurance that where they are and what they're doing in the team, their contributor is going to be there when we come out on the light at the end of the tunnel.
That's a great perspective, especially again as leaders here, right? We're not only leading businesses, but we're leading people. So I love that. I love that perspective. Thanks, Steve. Ken, what are your thoughts on that question?
I love piggybacking on all these guys. Sean mentioned making sure you've got 12 months of runway, and I'd add to that, but start acting and behaving like you've only got 3 months. today. And so, right now I like to think, is now the time for a free lunch. And, what I mean by that is every dollar that you're investing needs to be critically and very well thought through on how it's being invested. And I go to the 5 W's after that, which is, does the free lunch, who is that attracting? And right now, given that I've got to behave like I've got 3 months here, I need the best of the best, and I need the A players. And C players at this particular point in time, if they don't manage up really quick, they can distract. And then, what am I investing in? To what Mike was talking about, is it core to my business that's going to have an impact today, or is it a distraction that can pull us away from the core of the business to help to achieve some of these goals? And it also goes along with the operational excellence, that was just mentioned. What am I investing in? When, is now the right time to be investing, in these particular areas? Why is this critical to my business? And you're just kind of thinking through it right there, but being very, very intentional right now with every dollar, I think is very prudent. And frankly, it's what our investors are expecting from us and our shareholders at the end of the day.
Yeah, great stuff. Wayne, you want to take us home?
Yeah, I mean, there's lots been said, but I think it's interesting in these times that I think the fundamentals really come into bear here. It's really what it's all about, and focus a lot more on building value as opposed to valuation, right? It's leveraging your customers. We've talked about, Ken made a great comment about the team. Obviously Mike's comment about staying focused. I think when there are these shifts in economic conditions, and again, having been through the .com thing and raised a bunch of money and lost it and all those sort of things, it's I think Mike made a great point about, is your value proposition, is it aligning, is it changing with the pace of change, right? And the other thing that happens at this time is, one of the things that's interesting about our industry right now, I think, is you got 10 or 15 companies all doing the same thing, or there's not a high level of variation. So I think we're lining up as we did, remember 99, 2000, 2001, how many search engine companies did we have? 20? Remember Ask Jeeves, right? So we're kind of in that same cycle, I think, a little bit now, just having come back from Money 2020. I think a lot of you guys were there. It's kind of remarkable to walk around and see how many companies are kind of doing the same thing. So if there's 10 of them like that, who's going to survive? And I think in a leadership role, it's been very clear with Sean's comments and others, cash is king, keep those balance sheets fat. And a lot of people raised a lot of capital, in the last 12 months. And Sean's right. Absolutely, the great companies are going to continue to raise at reasonable valuations, albeit somewhat adjusted and so forth. But I don't know, I'd be looking over my shoulder for M&A activity as well right now. I think there's an opportunity to bring some people to bear through some of this acqui-hiring that we see. Not everybody's going to survive this, right? Ken makes a great point, play like you got 3 months. And by all means, cut back on the swag. That's just a Mark Cuban thing that I agree with a lot. It's remarkable how much people spend on that crap. And I don't know. And they give it to the people that invest in the company. Give it to your customers. Anyway, I won't rant on that. But anyway, Mike, I think some additional thoughts to that.
Yeah, that's great, Wayne. And I think going back to what Sean said, the thing I'd like to just highlight as well is this too shall pass. And I think Mike Cressy said that as well. When we're in the midst of something challenging, it can kind of be all consuming. It can feel overly difficult, and just a reminder that this too shall pass. We'll come out of this, and we'll be stronger for it. So great stuff, guys. Wayne, it looks like you're going to need to send Scott Mills some swag. So
I'll do that. I'll make sure that happens.
Yes. All right, my next quote. I love this one. I refer to this one a lot with my teams over the years. It's a quote by Winston Churchill. And the quote is, "Never let a good crisis go to waste." I'm sure a lot of you have heard that before, and hopefully many of you have realized that within a challenge or within a crisis or within a problem, sometimes we find our greatest opportunities, right? So playing off that quote, let me ask all of you this. In your professional opinions, what opportunities or benefits might be presented to fintech leaders in their organizations, not only in or during this time period, but maybe specifically because of it? What are your thoughts on that? And Steve DePerry, I'm going to start with you this time.
Well, what I would say with this one is I think back on examples, right? Examples just to solidify the point of the periods that were mentioned earlier that have been considered crisis that we've lived through in our careers. And the one that's most recent, and it's kind of funny, that the Great Recession was just months ago, but we're talking about keeping our people 6 months ago, and now we're talking about layoffs in our industry so quickly. But just recently, using the CSI traditionally has had very, very low turnover. Our people have been, but we experienced the Great Recession just as other folks did, and people wanted to try other opportunities and head on and do different things because of the environment. My approach to that was really right on point with the quote from Winston Churchill, is that every time we had a position come open for whatever reason, we didn't go out and try to replace that position. We took the perspective of, hey, let's evaluate our needs and let's adjust and make sure we're using those resources correctly to bring in the right people or the right resources or the right talent to match what we're trying to do at that particular time. So reforming, rethinking, being flexible, and not just being satisfied with the status quo. So what that did for us is we brought on quite a few new people at CSI and some really talented folks. And we do have that kind of evolving culture and that fresh perspective that's going to provide the benefits. So the proverbial making lemonade out of lemons is the approach we took.
Excellent. Thanks, Steve. Yeah, and great. Great point of reference on the Great Resignation, which is.
Sorry, I said recession, I think.
Yeah, no, but that's a great point. I mean, that's like what, less than a year ago, right? And
Yeah,
we're in a totally different situation here. So it's great perspective to add to the conversation. Good. Ken, how about you? How would you answer that question?
You can't scale broke. And what I mean by that, I've just seen this time and time again. But assuming that you just heed the advice of my fellow peers over here on this, and you're being prudent with your money, and you're looking at your execution, and you're building out your teams right, this is a critical opportunity to take care of and address all that, so that you've got a really sound foundation, because there will be opportunity that's going to present itself out of this, and it is critical that you have the resources to be able to capitalize and withstand this, but then you can then scale and grow out of this. It's critical that you're listening to your customers to truly understand where the opportunities are presenting themselves in today's marketplace, and that you're addressing those internally, both for today and starting to think about tomorrow. But again, staying focused on your core, but really shoring that up and getting all your infrastructure in line. And especially we as fintechs, sometimes we take that for granted. And so it's really important that we operationalize our businesses and get them prepared, so that when the investors, that new investments does start flooding and the market does start easing up, you can go full throttle again, and you aren't inhibited because of the fact that you've got gaps, in your business model, your team, your resources, wherever that may be, and that you're ready to go.
That's great. I'm going to just throw this question out to any of you. Ken, I think that's a great one. Can any of you think of an example you can share tangibly where saving and being more disciplined fiscally has given an organization the ability to invest when that next opportunity came? Or conversely, not being as fiscally disciplined cost an organization the opportunity to invest when that came along next? Any thoughts there, team?
I can hit the first one, Mike. So, I was running sales in a startup company during the .com, and we just raised over 50 million from Sequoia and Excel when the collapse hit. And so we slimmed down to a team of 25 people and essentially rewrote the entire business plan and spent the time to understand where the market opportunities were, specifically in the order to cash process. And then as we came out of the cycle in 2003, 2004, we're really able to come to market with a solution that was truly differentiating and ultimately led to our acquisition. So I think I've experienced that directly, and it is a great opportunity to do that. Though I want to build on something else Ken said around that. you have to have the right 25 people. You have to have the right team, right? So you've got to constantly garden that talent, or it's not C players that you've gone down to, that you've waited on, that save that money, but you really have an A team that's ready to get there and really transform the market space they're going into.
Great.
Yeah, let me pile on that for a minute, because two things. I think there's a message here from Ken and also from Mike, which is, it's a little bit of Gretzky thinking, right? You want to try to skate to where the puck's going to be to the best of your ability. But I think Mike makes such a great point, and about the right 25 people, and as a leader, you should never stop recruiting, right? Even in times like this. In fact, I would suggest that these are some of the best times to recruit. Some of the companies that we know that are out there right now who are doing reduction in workforce right now, who are cutting back in order to sustain balance sheets and keep them fat and put themselves in a good position, are also putting some great people out on the street. And, listen, good sports teams always looking for a better, shortstop or a better quarterback. There's a reason for that, right? So those are tough cycles, but again, in order to win in the long run, I think those are things that you got to do. So anyway, just to add to those comments.
Excellent. Well, then, thank you for letting me redirect a question there. I'm going to come back to the original question. Opportunities that are presented within this challenge. Sean, let me take that one to you.
Yeah, certainly. So when you go into, let me back up real quick. The cycle we just came out of, especially in the VC private equity world, was almost a fear of missing out from getting into new and exciting deals, to the point where, because of valuation insensitivity up market within the private equity world, at the early stage, everybody just wanted to get in a deal. And then once you're in the deal, the only thing that mattered was growth, revenue growth. So all resources were pointed to revenue growth. Well, the opportunity you have in a economy like this is for your board to back down on severe growth expectations, which will allow managers, CEOs, management teams to refocus developers on, as Ken pointed out, fixing what might be broke that can't scale when the time comes. Beyond that, Mike hit on this a little bit too. As you have a drawdown in talent, you're going to have a wage reset. We got to a place with the overheating at the early stage, especially in the fintech world, where developer talent grossly outstripped traditional supply and demand expectations for pricing. And we're going to see a bit of a reckoning, I think, quite frankly, which is going to allow companies that have the capital to find the right people without breaking the bank to do exactly what we talked about, which is fix what's going on there. And the CEOs have the air cover of the slowing economy to allow them to do that, to swap growth for product development.
So what I hear you saying there a little bit is the challenge gives leadership the excuse to do what's right, because the culture isn't acting unnaturally.
Well, right, because the markets were simply rewarding growth prior to January of this year. Now they're rewarding profitability, good products, and those positioned well to avoid the existential event.
Sure. No, that's great. That's a great perspective. Great point. Mr. Cressy, let's go back to you on this one.
Yeah, I think especially for the fintechs on the phone, right, and on the video, do know that even the largest fintechs out there, like an FIS as example, are needing during these times to pare back and figure out where are the right plays that we need to invest that are really core for our business. But we have the distribution channels that can open up a ton of adjacent opportunities for fintechs to be able to distribute in partnership with FIS into that distribution network, into those channels. So I think opportunity number one is, identify who's got distribution into the target customer base that you're going after. And they might have that distribution at scale, but the capabilities that they have are really adjacent to your own core capabilities. And look to work with those partners to find a win-win, because ultimately the capital budgets for those partners that might be distributing into that place you want to go are also being stretched. And then the second area, and we've hit it once and we've hit it twice, I'm going to hit it again: talent, talent, talent. There is a ton of talent that's coming out on the street. You've been hearing it mentioned. I refer to hiring, and you heard me use it once before, constant gardening. You're constantly in a process of nourishing talent up, pruning talent out, and replanting talent from the outside into your organization to get those fresh perspectives. So just be a talent hawk out there and constantly garden that talent base.
That's awesome. I love that. Talent gardening. I wrote it down, Mike. Very good. All right, Wayne, share your wisdom.
It's hard acts to follow here, Mike, for sure. But I think a couple things. The pandemic has been a catalyst for a lot of change, and the speed at which that change has occurred, I certainly don't think any of us, on the panel today would have recognized things could have happened as quickly as they did had we not had this pandemic. And so, I think it's good news for fintechs, right? Because innovation has not stopped. Banks, I think this industry that we're in particular, are more worried about this than they seem to have ever been before as we really think about digital transformation. So I think that's good news for us. How we react to that, how we plan for that, how we strategize for that, how we staff for that, how we raise capital for that's a whole other topic that we've tried to talk on here a little bit today. But the other thing too, I think, I want to just build on Mike's point a little bit, which is, this is an opportunity to take a step back and also really get focused on who is your customer. I think a lot of people who come into the fintech space think that they can do business with everybody, and they can't. And doing business with, I'm obviously very focused on community banks is different than it is at various tiers of the type of the banking industry that an FIS works with, as well as the community banks, et cetera. But having had FIS as a client and the ICBA as a client for the last 6 years of my life, one of the things I learned very early on is how you approach those customers is completely different, and they take different strategies and different people, and some is a direct sales approach and some is a channel approach, et cetera. So this is a good time to really, again, step back, focus on the fundamentals, work towards profitability, get your team right. I mean, all the things that have been said today, I'm just reiterating, but more importantly, really figure out who they are and get them engaged. The success of the accelerator programs that we built at the Venture Center over the years was really based on the secret sauce was having the buyers at the table and giving them that opportunity to collaborate directly with the fintechs, and getting that opportunity to sit down with bankers and have that exchange, not in a Shark Tank environment, that's not productive, but rather a highly collaborative environment where people can exchange ideas and help shape and mold and sculpt these solutions so that they better serve their customers, your customers, our customers, et cetera. It's good time for that, for sure, and always good time for that.
So Wayne, I'm going to give you a follow-up question. This might be a tough one. You can tell me you don't want to answer it if you don't want, or if you're not able, but let's
more swag.
Let's just say that one of your partners in that instance, a customer, is on the panel here. And I asked that same question to them. What's the opportunity that's presented to fintechs right now? What would those customer partners, what feedback would they provide?
I think we're at an interesting place here. I think, and I look at this a lot right now, obviously through the community bank lens that I have some responsibility for. But I think I think there's an opportunity to educate better than ever before, and I think we have a responsibility to do more of that. And I'll be candid. As I reflect back on the accelerator programs, we touched a couple hundred banks during that program. But when I look at the ICBA and I look at community banking on a national basis, we're looking at roughly 2,700 banks nationally, right? So what are we doing? We've touched maybe 10% of that. We've scratched the surface. And what I'm trying to understand more than ever before is why so many banks don't get engaged. What is it that they are fearful of? Are they truly complacent? And I believe there's 1,000 of them out there that do really care, but there's a lot that may not for whatever reason. Is it because there's a lack of relevance in what we're talking about topically, because we're not focused enough on ag banking, for example, which is a big issue, et cetera? So I think that there's a huge opportunity for all of us to be more forward thinking in terms of how we're educating our customers, not only to buy, but also educating ourselves on how they buy to understand that better. So the other thing is, like I said earlier, there's an opportunity. There's a lot of companies out there right now today that I don't think are companies. I think they're features, you know, and there's an opportunity to bring those features together. And we see also this, this growth of this connectivity between cores, obviously, and fintechs, et cetera. And, you know, it's interesting. And FIS is doing a great job with this, building up this BaaS hub and the API structures and the things that you all are doing to create that connectivity. The banks are still reliant on the cores for a lot of direction when it comes to innovation. And the fintechs are kind of pounding from the other side saying, hey, so there's this struggle there, this friction that's created to some degree. And it's worse for some and better for others. But figuring out how to make that work together is where I think there's huge opportunity. And, you know, I use the metaphor, you know, if you want to tow your boat, the first thing you got to do is you got to put a trailer hitch on your car, right? So we kind of got to get these trailer hitches installed on these banks so they can tow whatever they want, you know, and it's the same bit. And I think ultimately that we will land in a structure that almost looks like a Chinese menu, right? I want number 31 and number 24, right? Because I've got that hitch installed. And I think a lot of the companies that are working there, I think there's extraordinary opportunity for everyone to win, for the fintechs to win, for the banks to win, for the cores to win, et cetera. So certainly a topic that we can drill a lot deeper on, but hopefully that's helpful.
Yeah, no, that's super helpful. I'm going to ask a follow-up question to everybody. And if you've got an answer, just jump in. You know, NFO, National Fintech Organization, is really serving fintechs that serve any industry. So we've talked a lot about community banks. But really, people on this call could very well be serving insurance or healthcare or mortgage tech or anything, right? What adjacent industries to the traditional banks do you think might be great opportunities for early stage fintechs to look at right now, if any?
Well, you know, let me jump in there, Mike. I think, you know, people used to say to me at the Venture Center, you know, all you're focused on is fintech. And I used to say, yep, that's pretty much it, you know, because people think about fintech strictly this way as a vertical, right? And for financial services. But I would beg that no one would differ with my opinion that fintech is horizontal, right? I mean, we talk about embedded finance, right? We talk about, I mean, look at the application in healthcare. I mean, oh my gosh. And what y'all are doing at FIS, I know there's work that's being done there as well, looking at that, et cetera. I mentioned ag before, right? You know, 80% of ag loans in this country are made by community banks, and we still have farmers who are maintaining their businesses on paper ledgers, right? So the adjacencies are endless, and that's what I love about fintech and always have, is that we cross all industry. And if there's a business out there that's doing business with a bank, it's evident, right? So you know, that's an opinion.
Great comment. Love it. Anybody else?
Well, from a macroeconomic standpoint, we're seeing a lot of fintech innovation in and around the changing nature of payroll and the employer and employee relationship, especially as you've gone from the Great Resignation to the Great Layoff to whatever we're going to kind of come back to once things normalize. You have a younger, more tech savvy, tech native workforce that is seeking an entirely new approach to the way they get paid. So you'll continue to see instant pay opportunities. You're going to see disintermediation within the employee benefit space to where you've got some flexibility around being able to change decisions around how your benefits are paid to you. So I think there's a lot of different things that come out of economies like this. Just one other point, though, too, on the bank perspective, and especially dealing with some of the smaller banks. You know, we just went through a 12 to 15 year period where we were almost at a 0% interest rate yield, which really made it difficult for the smaller banks to find excess IT budget because the revenues were so contracted. So I think there is a lot of opportunity as interest rates continue to rise to see banks be a little bit more proactive around, as Wayne said, bolting some more products onto their existing platforms.
Very good. Very good. Thanks, Sean. All right. I'm going to take us to our next question, but let me just say, if anybody has questions, feel free to put them in the chat. We've got about 20 minutes left, and I don't know that we have 20 minutes of pre-prepared content. So if you have any chat questions, please feel free to throw them in there. But the final question, or the final quote I wanted to share, is probably my favorite one for today. And it is a quote from Will Ferrell, a wise man that maybe many of you have heard of. And here's the quote: "Before you marry a person, you should first make them use a computer with slow internet to see who they really are." I think that is brilliant advice. So on the theme of brilliant advice, here's my situation I want to pose to all of you. You are sitting with a friend who runs an early stage fintech, and this friend says to you, "What is your most sage advice for me as I navigate my company through this time period?" What advice do you share? And Ken, we'll start out with you this time.
Oh, I'm glad that get over yourself. That would be the first thing I tell them. I mean, you are not an exception to Sean's rules. It blows me away as an investor in fintech, and obviously, you know, being a part of scaling this one as well. The egos that we have because we are in this fintech space. It's like you are already able to, I mean, clearly we show up in t-shirts, you know, in shorts and flip-flops to a bankers event where everyone's in suit and tie. So that's an exception now that may pass, but it stops there pretty quick with the money now. You know, the whole thing of just being able to focus on top line growth and being able to cash burn, that's gone. The ability to not have margin into your business, that's gone. The ability, you know, Sean, we are still being challenged and expected to still grow without experiencing, you know, some part of potential dilution, you know. So it is interesting to see how much the landscape has changed and the rules have changed. But there are rules that we have to abide by. And so, you know, yes, it's revenue growth is required now. Margin is required, and being cash flow positive is required now within a short period of time, call it 12 to 18 months, maybe. 18 might be getting a little bit long. And so how do you do that? And, you know, talking to that same friend is leverage resources. What does your board look like? What does your team look like? Who are you accountable to? I think accountability is one of those things that blows me away, where we as founders and CEOs, we don't like to lose control. We don't like to be accountable. We get concerned about being pushed out and losing. But if you find the right team that you build around you, they're there to help you. And when they're aligned with you and your interests, they can get you there faster, with less heartache, without wasting a bunch of money unnecessarily. That you can leverage their network, their expertise, their experience. I think that board composition, that leadership team composition, we're going back to the who, which we've mentioned a million times here on this panel. I think those are critical. So take that ego and channel it in the right way, because it can be done in the right way, but don't let it get in the way, and don't think you are an exception to any of the rules that are out there.
I love that, Ken. I think that's great. And I just want to piggyback on, you know, the concept of being leveraging those that you're accountable to, right? They want you to succeed, right? I think oftentimes we can feel like we just are beholden to them, right? But they are in our corner. So, you know, leveraging them for our success is great. That's great, Ken. I love that. Mr. DePrime.
I'm not going to get over that one, Mike. You know, speaking back to what Wayne was talking about with the opportunities, I mean, it's almost too large to get your mind around with the possibilities of fintech and working across all these verticals that we were kind of alluding to and all that. Part of what's going to make all that happen is partnerships. And I think if I were, you know, giving someone advice, I would say build your network. Build your network, you know, learn, you know, who the companies and the players are and what their value propositions are, and what problems they're trying to solve and see where those commonalities are, because when we find those common problems that we're trying to solve, that's where the genesis of a partnership starts. And if you've built out your network, and you know, plug for these organizations like NFO and AFT, which you referenced earlier, that's where you're going to have developed those relationships and be able to capitalize on those mutual interests that build a healthy partnership. And you've seen it, Mike, just like I have, participating in some of these trade groups that we do. You ask the companies that were early stage 5, 7, 10 years ago that have become more mature companies today, and the network and the relationships that they developed, they always say that was a key part of what made them successful and what got them there. So that would be my advice.
I love it. Let me just piggyback off that, not with a question, but for information for everybody on the call. This isn't just a plug for NFO or AFT, but piggybacking on what Steve said, I think a great way, regardless of the economy, is to build out your network. And if that's an area that you want to work on, go to National Fintech. I think it's nationalfintech.org, or just Google it so I don't screw it up. And look for ways that you can get plugged in there, and you can learn from what we've provided, and you can give back and build your network. Similarly, if you're serving that community financial institution space, AFT is a great organization to get involved in. Would love to see you attend that. So those are really, really tangible ways you can walk away from this call with a to-do that I guarantee will benefit you. So love that, Steve. Good stuff. Mike Cressy, sage advice.
So I'll go with the concept of repetition drives a message home. Number one, develop your network, right? And make sure that that's intact. You've already heard that said multiple times. Reach out to large processors, reach out to people that you perceive that might be competitors, right? Reach out to your clients, most importantly, and get alongside them. You've got to get out into the market and see where there's opportunity for you to capitalize on more wallet share, and for you to capitalize on other distribution channels or networks that might already exist. And then the second sage advice I'd be hammering on is, tell me about your team. Do you have your team all on side? Is there transparent and open communication? Does everyone understand where the company's at right at this moment? And does everyone have line of sight of what it's going to take to get to the next step, and then the next step, and then the next step? That's really, really important, especially in earlier stage fintechs. Otherwise, you can get a very cancerous undercurrent where, and I always say this to my teams, where there's a lack of information, people are going to invent a scenario in their minds that's way worse than what's actually going on in any given situation. So it's critical that you're really driving comms out to all of your teams and to your customers as well, so that they don't in return, or they don't instead just invent a very negative scenario that is actually much worse than the current situation.
Great rule overall. That's great, Mike. Thank you so much. Sean.
Yeah, well, one, on Mike's point, bad news doesn't get better with time. So be sure to keep the lines of communication over, but maybe more generally, and this is kind of back to basics for anybody who's out looking to raise capital. I've seen it time and time again where we as entrepreneurs can often become infatuated with the name and the logo next to the money that we're bringing in, where often you've got to find the right fit for who is going to help you lift your business and not just lean on you for your returns, and being very thoughtful around that, and not getting falling in love with window dressing, but finding the actual real fit for people who are going to help you build your business is the most critical thing. The next thing I tell you is recognize that you don't want to be the smartest person in the room. Hire the best people around you and be willing to learn and listen. One of the first things we have come to find as a way to discriminate between founders we're going to invest in and founders we're going to pass on is if you're sitting in a meeting and they're regurgitating what they think you want to hear back versus listening to you, being thoughtful about your comments and questions, and coming back with answers that they may not have right at the same time, but being able to be coachable. So.
Love that. Love that. Mr. Miller.
Yeah, I think, Mike hit it on the head. It's very repetitive, but I think these messages are worth repeating, Sean makes such a good point about, value beyond capital, right? I mean, have you raised money are you just looking for money, or do you really want people who are going to help you grow your business, right? Do they have a strategic value? The other thing too is, as you look for these other opportunities and these adjacencies and so forth, which you should do, I think the challenge there is to not lose focus, right? To remember what your mission is, but still setting time aside to look at other things and what those potentials are. The other thing too is, when we talk about people and building networks, there seems to have been a trend that I've seen over the last probably 7 to 10 years where the emphasis on advisory boards and having advisors associated with the business seems to continue to diminish. And, I know just personally from the companies that I built, that where I didn't necessarily get the value from my investors, and not that they didn't provide value, but there were gaps, my advisors made up for that in many instances. And, I think those networks have to be able to open doors, to provide advice, and to continue to make us humble. Ken nailed it. I mean, you gain nothing in this world through the ego issue, and particularly in the work that we do. So much of us really, I mean, we're obviously, we want to make a living, and returns are important and all that sort of thing. But, being able to lift the banks, being able to lift the customers, being able to lift the fintechs is a great reward. And I think you do that through all the things that we've talked about today, which is about the fundamentals and about having the right team in place and so forth. But man, I'll tell you, I never struggled to have to be the smartest guy in the room. That was never me, and I never wanted to be. And Mike's so right. I mean, I think we've all said the same things here. Surrounding yourself with people who are smarter than you. If I know more about you as the marketing manager, I've hired the wrong marketing manager, right? If I'm looking, and where we see the largest gaps here, in my opinion, is this from a sales perspective, and CEOs who know how to build appropriate sales strategies and really put those things to work. And great advisors and great investors and great business partners and all the things we talked about today contribute to that. But, as Sean said, you got to be coachable. You got to be willing to listen. Somebody told me a long time ago, God gave us 2 ears and 1 mouth for a reason. Well, it's not always that simple, but, and I'll shut up now as well. Sorry about that.
No, that's beautiful, man. That's awesome. That's awesome. We don't have any questions in the chat. I assume that means because you guys have been so captivating, people haven't had a chance to type. But in light of the fact that we don't have any questions in the chat, I'm gonna go off the cuff with another quote from Yogi Berra. And that quote is, always go to other people's funerals, otherwise they won't go to yours. Okay. So on that kind of strange theme, I'm going to ask this question. If something had to die, if something had to stop, you guys just talked about a lot of things people should be doing, your advice for what they should do. What's your advice for something they should stop doing, they should not do right now?
Make sure you do not fall in the trap of rationalizing how you got to the place you got to. Focus on how to move the business forward.
Put a little meat on that for us, Mike.
Absolutely. I mean, I see this temptation in my own world, right? Where you're going through a difficult financial situation. You feel like you have to upward manage. You have to upward manage to your board. You have to upward manage to your investors. Like, this is how we got here. Let me make this spreadsheet show this particular story or this particular thematic, right? And the reality is that should not be the focus. You are where you are. Now, how are you going to move the business forward? Focus on your core, focus on your talent, focus on your network, and go execute. And so just don't get caught in the rationalization trap. There's just a lot of wasted cycles that can happen there, and it's not for anyone's benefit.
Gotcha. Any other thoughts on what we would advise people to kill in what they're doing right now, to stop doing?
One of the things that I found as history repeats and rhymes is we see business models that were not good ones come back around and become in vogue as folks find people willing to back them who don't do the work behind it to figure out it's something that didn't work. I've kind of been on this for a few cycles now, but the buy now, pay later is just an injection of credit that's been in place for a long, long time. And thinking about things like that being in vogue, especially as you're getting into a situation where people are going to be tight on cash, can really create some bad incentives for folks to get themselves upside down and sideways.
Good wisdom, Sean.
Your quotes are killing me today, man. These are pretty good. They the term countering back with a one-liner is do it now. And what I mean by that is quit procrastinating. If there's someone on your team, the relationships are hard, people are hard, and most people at the end of the day do have a heart underneath. But if you don't envision someone being a part of your organization 3, 6, 12 months from now, or they're there just for that free lunch, it's time to get rid of them. And you're only just piling on to your own problems and you're not helping them find their next career any sooner. You're not helping yourself find another A player to come in and help you through these trials and tribulations. So don't keep piling on and investing money in someone that isn't going to help you just because you can't, do it now. Same thing with, your product strategy. If it's not working and, you're just, well, if we just keep on doing this, to Cressy's point, change it up. Like if it's not working and it's not part of your core, it's not part of where you need to be going, like pull back, save your funds, get realigned with your team, your product strategy. What are you really trying to solve? You're talking to your customer, understanding their needs. How does your product strategy, your roadmap tie to that? How does what you're investing in today tie to what they need? And who's going to deliver it correctly? So just quit procrastinating.
Yeah, I think that plays even off what Sean shared earlier, which was bad news doesn't get better with time, right? These problems don't get better with time. Just do it.
Well, and on that point, during the last cycle, we saw probably a half dozen businesses that we had invested in where we made the mistake of allowing management to make excuses for poor performance based on macroeconomic factors, when really it was the fundamentals of their business were broken. And so don't let yourself fall on that crutch of, oh, it's bad for everybody, so therefore that's what my problem is. You need to be very introspective about what really might be causing your business to struggle.
Very good. There's a question in the chat from Ken. It says, anything happening in cross-sell area that fintechs can facilitate? I don't know if that's a question that strikes any of you.
I mean, I think there's a lot going on in from cross-selling. I mean, I think there's an attempt for a lot of companies, particularly through the onboarding process today, to suggest that that's a way for them to learn more about their customers, to be more effective in terms of cross-selling solutions. But I suggest probably where Ken's going, knowing him, that his interest is probably a little bit more leaning towards the insurance piece. And I think, again, as we see more embedded solutions, not just finance, but those options will continue to present themselves. More one-stop shopping, if you will. I mean, buying a car should also probably include insurance at some point that you don't have to do separately or outside of that transaction to be included in it. I mean, just sort of a simple approach there, but I think that will evolve pretty dramatically.
Agreed. All right.
I got a question, Mike.
Yeah.
So when you were talking about other opportunities for fintechs to go after, other verticals to pursue, I stayed on the mute button because I was just waiting for Cressy to talk about commercial opportunity or B2B a little bit more in some of those areas that present themselves. So I would love to get some of the panel's take on commercial. Fintech doesn't it's intimidating to fintech in general, and I think there's tremendous opportunity. So Cressy, preach, brother.
I would absolutely love to take that, and I appreciate the tee up, Ken. Look, at the end of the day, we've seen so much innovation happen on the consumer end in terms of the quickness of payments that are made, the transparency of payments that are made, the simplicity of payments that are made, even the security of payments that are made. And it just hasn't translated to business, where, as you might hear me say, it goes from paper to electronic to paper to electronic to paper to electronic as it goes all the way through the accounts payable and accounts receivable process. There is a massive total addressable market in that space, but as a fintech, you'd want to be oriented to already be there and already be capitalizing on it, right? You'd want that to be your core. You wouldn't want to break off and go chase that, especially given the need to focus on your core. But if you're in that space, whether it's on the AP side or the AR side, we're starting to see a lot of consolidation start to happen. The CAGR is still programmed to go out about 8 to 12% through 2027. And the opportunity is massive, not only domestically, but also globally. And what I would tell you as part of those B2B solutions is there's niche capabilities that are required around fraud services, around money movement, right? So there's a number of different capabilities that if you have those inherent, and I know this is where Ken's going, think about, could I take this asset and actually make it a part of a broader offering of someone that's going full with a B2B solution, or go into that B2B distribution channel. So yeah, it's a very hot area for sure. And Ken, I'll flip it back to you. When you think about B2B and you think about it in terms of BillGo and in terms of the space, what gets you excited and what would be your advice?
I mean, this is where we're challenged on staying focused on, what's most important today. The people that are coming after us the most and are so thirsty and begging are the commercial groups, and they are trying to look for ways to improve. If consumers behind by 10 years, they're behind by 50 years. And so what needs to be done, but it is a big undertaking. And to your point, Mike, like, you do need to leverage some stability factors. You're evaluated through a different lens at the commercial side than you are perhaps with other fintech players and on the consumer side. So it is a different ballgame. For us, it's one of those things where we have to really vet through whether this opportunity is key to today and what our offering is, or if it's going to be a distraction. Because man, there are so many different areas that we can go in and help remove the friction that presents itself, like you said, on both AP, AR, and and the next one. That it's tremendous, but it can be a distraction too. But we look forward to continuing to evolve through that.
It's great stuff, Ken. Thanks for bringing up that question. I appreciate that. So we heard from three of you kind of wrapping up. Steve or Sean, any final comments before we say goodbye?
The one thought that just kind of popped in my head as Ken and Mike were talking through that is, perhaps the building blocks that have been put in place and are still being put into place to open up banking, provide banking as a service, and that myriad of microservices that are daily coming up more and more available, allows us to move the industry to move into that commercial space where it's not going to be single solution that solves all the problems, but it's more of I don't remember who said it, but the Chinese menu, and you're picking from those microservices to build these solutions for the commercial applications to use. So perhaps and probably the consumer side had to happen first to build the foundation for us to move into that commercial side.
Thanks, Steve. Sean, any last words from you, sir?
Yeah, no, one, thank you. Very, very good job, Mike. Secondly, commercial side, especially B2B banking is still a gigantic opportunity out there. It's taken about 15 years of continued groundwork and pounding into the heads of your traditional bankers to get them to open up their mind to the new ideas around small and medium-sized businesses, especially folks like what they're doing at BillGo and Bill.com have had a lot of success getting in there, but there is a great deal of opportunity and greenfield in there. And I do think there's a tipping point coming in the next few years where we're going to have all the banks actively going after these small to micro businesses and tons of entrepreneurs who are already out there building platforms that are really going to take advantage of that.
Yeah, great stuff. Well, we're at the top of the hour. I shared some great quotes. You guys shared some great quotes. This too shall pass. You can't scale broke. Be a constant talent gardener. Hire to make sure you're not the smartest person in the room, and a whole bunch of others. So you guys did a great job. I hope everybody enjoyed it. Once again, go out to nationalfintech.org if you want to learn more, get involved. And thanks again to our panelists. Hope everybody had a great time. Have a great day.
Thanks, Mike. Thanks, everyone.
Great job.
Thank you, Mike, and thank you to all of our panelists for an information-packed session today. Thanks to everyone who joined us. As a reminder, the recording of today's session will be available soon on the NFO's YouTube channel. Join us for the next presentation in NFO's Growth Garage on December 15th at 2 p.m. Eastern, when Terry Ammons from Whitley will lead a panel discussion titled Refocus on Risk Management for Bank and Fintech Partnerships. Registration will be available soon on the NFO website at nationalfintech.org. Thanks again for joining us. Have a great day.